So on the investment side, here are the 4 values that I think you need to communicate about investment planning. Right? The first being that your investment advice is always given only within the framework of wealth management. You're going to know about the other issues in their lives, especially the tax issues. Right? How many of you in this room would make an investment recommendation to a client without reviewing their tax return or getting their tax information? How many Merrill Lynch advisors do that every day? All of them. So what you think is unthinkable happens every day to your clients. You should point that out. Secondly, you have an articulated investment philosophy. Rob talked about the white papers we have, but the investment philosophy we have, the core investment philosophy based on modern portfolio theory about diversification through multiple asset classes is important, and it's used elsewhere. But there are a couple distinguishing features to our investment philosophy at First Global. Can you articulate them for clients? One, we've got real estate and commodities as distinct asset classes. Most Wall Street firms don't have such asset class diversification in their portfolios for clients, for retail clients. They don't. Okay? Those are distinguishing features. Third, tax alpha. Couple different levels of tax alpha. We have a white paper on it, a short mini client white paper on it, but tax alpha, think about it, there's the portfolio level tax alpha, tax loss harvesting, being able to coordinate what managers are doing across portfolios in IMS Unified Choice. In the macro level, you've got tax alpha. Tax alpha is any advantage, monetary advantage you bring to clients through your tax expertise. So unified portfolio theory has vehicles, has protocols that offer vehicles opportunities to gain tax alpha for your clients. Oil and gas programs, municipal bond portfolios, etc. Asset location. Which assets should you have in qualified accounts versus non-qualified accounts? Okay? So there are ways that you can coordinating tax gains and losses across accounts and holdings that may be outside of what you see. Company stock they own. You can help coordinate that. And most importantly, that you're customizing solutions based on your knowledge of the promises your clients make in life. We have these old words in here, needs, goals, and resources. But what's everyone's goal? Everyone's goal really is to deliver on the important promises we make in life. That's everybody's goal. You just don't know what those promises are. You need to find out. Core values. Okay, let's go to the implementation meeting. Discovery, implementation, review. So the implementation meeting, we talk about investment planning here. You're going to be implementing an investment solution for the clients. What is your value? What are the benefits to clients that you can communicate at the implementation meeting? And again, distinguishing benefits is a really good phrase. It's part of the value proposition kit. What distinguishing benefits? They're distinguishing in what way? One way they could be distinguishing is that they're different from what other people offer. They're distinguishing, they stand out. So first, investor profile. You're not going to make an investment recommendation until you have a clear snapshot, a clear understanding of the investor profile. Does that make sense? You're not going to start with features. Here's the portfolio I recommend to all my clients who look just like you. That's a real sizzling, come on. I need to understand your investor profile so that I can customize a portfolio. What's the benefit? That allows you to be invested within your comfort zone while enabling you at some future point to deliver on the promises you make. Your comfort zone. What happens if the investor profile is wrong? What happens? Has that ever happened to you? What happens? He. Why'd you say he? It's amazing. Men take on more risk than they should. It's a phenomenon that happens. I've seen it for 20 years. Men purport to be more aggressive. When bad things happen, they don't like it. Because they say, I want this, I'm used to this. They're very aggressive, and they tend to overrepresent where they are on the spectrum of conservative, aggressive, et cetera. So you need to be able to get the investor profile right and then say, you know what? We'll review this investor profile periodically because we may need to adjust it under battlefield conditions. I mean, sitting here checking boxes when everything's rosy and you haven't invested a dollar yet or the market's good is easy. It's when you have these downturns, how do you feel? How's your investor profile looking now? Well, I didn't think it would go down 18% in the first quarter. Well, why not? It said on the investor policy statement, you're willing to tolerate. Well, yeah, that's not how I feel. Charts are one thing, my stomach is another. So investor profile is a powerful tool. And it's not like it's one and done. We do the profile and you're good for life. No, it's a working document. The asset allocation is a feature. What's the benefit? The asset allocation is designed to match your investor profile so that you don't engage in bad behaviors, as Nick calls them, when things get tough. So I'll be able to say to you, yes, your portfolio is down 18%, plan is in place. Talk to you in 3 months, and you'll understand that we're on the same wavelength. That's setting expectations properly, isn't it? Stay the course. Due diligence. This might be a question clients don't ask, but you need to answer. How do I know that what you're recommending me has been carefully selected and is being monitored? What is your process? What is your discipline for due diligence on the recommendations you're making for me? Now, the most efficient way to do that is to leverage First Global and to allow our investment committee and our due diligence process to work for you. Our due diligence white paper is published, right? Our mini client paper. Paul, do we have a due diligence paper out there? You guys seen it? Yeah, we got one out there. You have to have a process. I would explain to people so that when things go bad in a little part of the portfolio, you're able to say, here's what we've done about it, here's what we're doing. Here's the process, here's the discipline. It's not a random event. There's a system that provides discipline for your experience. And we're on top of it. That includes the manager selection, the program selection that you choose. We're going to match the program with an IMS that fits your investor profile and what your preferences are. Because we have flexibility to do that. And set expectations. I've said some of them. How do you set expectations this meeting? What types of expectations would you set? Okay, I'm making my investment today, Bill. What should I know as I leave this office today? First, here's what you can expect from us as a firm. Right? Here's what you're going to get. You're going to get a statement this month. It'll be your first statement. So what I recommend is that you call the office and talk to Tracy. And Tracy will walk you through the statement, explain it to you, answer any questions you have, make sure you're able to go over the statement and understand what's going on. So you should do that with your first statement. Same thing with your first quarterly performance report. Give us a call. One of us will be happy to go over how to read it even before we have the review. So at least you know what you're looking at. Okay? You can expect communication from us. We'll call you or you can call us, however you want to set it up, after you get your quarterly performance review, quarterly performance report. We can set up a meeting. We can talk on the phone. Whatever you want to do, set the expectation for what happens, how they hear from you, and what you're going to do. So that's what you can expect from us. Here's what you can expect from the markets. What can you expect? Show them the Wizard of Id cartoon. Markets behave like this. You're going to hear bad news on TV. Read about it in the magazines. Here's what you should do. Nick says ignore it. Maybe ignore it. Call me. Tell me your concerns. Tell me what you're feeling. Maybe we need to adjust the investor profile. Maybe we got it wrong. So let's make sure we're in the same boat here and everybody knows where we're heading. Here's what you can expect from your account or accounts. Right? You got 6 distinct asset classes. What should you expect to see of, say, in those 6 asset classes? What's something you would tell clients to look for? You think that's a good thing to tell them? Some are going to go up, some are going to go down. In fact, if they're all going up at the same time, we have a problem. If all your investments are going up at the same time, we have a big problem. Similarly, if they're all going down together, we have a big problem. So you will experience ups and downs. That's normal. Nick said yesterday, you're going to be the tortoise. You may not feel like you're winning the race, but you will cross the finish line first. Because we will keep you in the game. We will keep you in the race when other people quit. Tortoise and the hare, great analogy. What can you expect? That's from your accounts. What can you expect from yourself? How's that for setting an expectation? Here's what you will experience as an investor. What might you tell them? Go through the bad behaviors. 8 of them. You may want to change into the highest performing mutual fund you ever saw. You might want to sell everything when everything's down. You might want to look at that quarterly performance report and say, this is the dog of my portfolio. Let's sell that and buy the best performing one. People ever say that to you? Let's sell this bad one and buy more of the good stuff. That's common. So here's what you'll expect from yourself. You may get sick when the market tanks and you'll be watching TV and they'll tell you the world's going to end and you'll believe it. What should you do? Call me. Because some people at that point, they transfer out the account and they never talk to you. Because the pain is so much they can't even tell you how painful it is. It's an emotional, gut-wrenching experience they don't want to share with you. Especially if it's a man who's told you he's super aggressive and he's chickening out at the bottom. It's not macho to quit. No, I'm going to another advisor because he tells me he's got a little better research department than you have. That's what he'll tell you, but it's not true. So setting expectations, really important. Review meeting. At the review meeting, say a review meeting is an hour long. How much time do you spend right now at a review meeting looking at the portfolio? Say it's a 1-hour meeting. Give me a time. 3 minutes. 10 minutes. That's the normal answer. 15 minutes maybe. So you've got 45 minutes to spend with the client because if you've set their expectations correctly, the review of the portfolio, again, is fairly routine. Let's review what's happened in the markets. Let's review what's happened at the portfolio level. Let's review what's happened in each asset class. And maybe let's review what's happened with each manager selection within each asset class. If you want to. You can do that. Great. Everything's on track. You feel comfortable. You're sleeping at night. Here's the question. How do you feel about your investment accounts? How do you feel? It's going to be an odd question, but how do you feel? You feel confident? You feel scared? You feel nervous? You feel unsure? How do you feel? It's important because feelings drive bad behaviors, and my job as your coach is to keep you from behaving badly. So tell me how you're feeling. How did you feel the day that the cover of the Dallas Morning News said, "Market tanks, world in turmoil"? I said, well, I felt like puking, Well, you should call me then. Because I felt the same way, but you got to kind of go back to your anchor. Look at the blueprint, look at your program, you're diversified. You know what? The world goes down, the commodities go up. You notice that? Markets tanked, your commodities went up that day. So you actually did better than the average investor. You were down less than he was. You should feel good about that. I should feel good about my portfolio being down? Yes, because you're less down than everybody else. Oh, okay, I can feel good. You can feel good about that. Believe me, our exposure to commodities, I don't know if you've experienced this. How many of you experienced this, where the commodities portion of your clients' portfolios has made you look like a hero? Have you taken credit for that? You should take credit for that. Investor profile. The investor profile is the answer to the question, how do you feel? If you're not feeling terribly well or comfortable, there's probably a problem with the investor profile. It's not a good match. Or expectations have been misset. After all, if your nice 6-asset class portfolio is delivering an 8 to 11% annualized return, and you look in the paper and say that, you know what, the emerging markets ETF was up 21% in the same time frame. Maybe you feel like, and this is very common, everybody's making more money than me. This is a very common feeling that people have. The feeling, I feel that everyone else is making more money than me. It may be true, but that's okay. Remember, tortoise and the hare. So people get this envy thing. When I worked in Florida, I will tell you this, that for some reason, every retired man of, I'd say, affluent, claimed to have had a 14% rate of return. It's 14. That's the magic number in Florida. But then I learned after a couple years in Florida that retired men lie about the average annual return, their golf handicap, and their sex lives. That's the three things that's routine, it's okay to lie about. So that 14% number seems to fit the magic number, but it's not true. So this feeling that everyone's making more money than me might occur in bull markets when you're in a diversified portfolio. You have to set expectations. This is okay. This is what we want. Let's go back, not to the investments, but to the investor. That's you. How do you feel, not about your investments now, how do you feel about the promises you've made and your ability to deliver on them? I feel good about those. That's all that matters. Forget about feeling like you're not being macho enough to make money, more money than your next door neighbor. Are you confident that you're able to deliver on the promises you've made? That's the litmus test of whether you're providing value or not. They paint a picture. It's a review meeting. This is good. It's a review meeting. We're reviewing a SEP IRA, a small SEP IRA plan. So the business owner's coming in, talking to an advisor, and the meeting goes something like, here's the status of your SEP IRA account. Here's how much you can contribute this year. Please make out the check to so-and-so and get it here by X date. That's about, how long did that take? About a 3-minute meeting, 5-minute meeting. So the advisor says, great, thanks, great meeting. He's like, it's lunchtime, starting to get up, find his lunch, his wallet, his keys. Says, great, is there anything else I should know? This is a big question. Write this down. Is there anything else I should know? Or some form of that question. I mean, the guy has one foot out the door to go to lunch. The SEP IRA review meeting's over. I'm hungry. I'm going to lunch. And the client says, funny you should ask. Yes, there is. Oh, sit down again, forget lunch, look at my watch. What is it? He goes, my parents are having their estate plan redone. Oh? By their Smith Barney broker. Smith Barney, right? Remember that? Steve Chase. By their Smith Barney broker. Would you mind taking a look at it? Be happy to. What do you think the Smith Barney broker was doing with the estate plan? Two things. Found that right away. One was recommending $10 million of life insurance coverage. Client had a need for 5. Secondly, was cashing in existing cash value life insurance policy that was perfectly legit to fund the new policy. After the review of the client's estate plan, guess who wins 2 new clients and keeps a client for life and gets all their business forever? This firm. All because he asked one question. I don't think he consciously asked it. Is there anything else I should know? So here, think about what's going on psychologically here. Here's a client that has an advisor and has a problem looming, a huge $10 million problem looming near him. He doesn't think to bring it to the advisor's attention without it being pulled out of him. So the lesson here is that clients are not going to bring you their issues all the time voluntarily. This will lead to my final soundbite. And here's the question you may wrestle with. I get asked a lot. Bill, how do I go back to my tax clients that I've had for years and tell them that I now want to talk about something called wealth management? I've been doing their taxes and collecting that $700, $800, $900, $1,000 a year, doing their tax work, and now I'm going to go back out of my comfort zone, change the relationship, and say, let's talk about wealth management now. There's a psychological fear that, first of all, why am I qualified to talk about wealth management? I do the taxes. And they say, the client will never buy into me as a wealth management guy. I'm the tax guy. So therefore, you never have the conversation because you have these psychological roadblocks to engage the client. Here's the answer to how to have that conversation. This could make you a lot of money. He said, you know, Joe, I've been doing your taxes for years. I've been doing taxes for a lot of people for a lot of years. And something's changing. Over the years, I've given my clients advice about a lot of things beyond taxes. I reviewed insurance, I reviewed retirement plans, I reviewed investment programs. I've seen their investment results on their tax returns and talked about them, made suggestions. I've been giving advice about all of these things outside of taxes for years. And I've watched my clients take the advice and go elsewhere and have it implemented, and a lot of times it's not done right. And I see it on a tax return, I hear it in the stories. So now what's happening is our best clients are asking us for more than advice. They're asking us to do more. Not just advice, they want us to customize the solutions for them, tell them what to do, then to implement them right here, to do it for them, and then to constantly review what they've done to make sure that everything is on track with the advice that we initially gave. And that is the imperative around which our wealth management division or our wealth management practice is operating. It's a premium service to our best clients. It's a premium service to our best clients, and I wanted to mention it to you because you are one of our best clients. And I wanted to invite you to become one. Now, if you say that to a client, what's the worst thing you're going to hear? The worst thing you're going to hear is, that sounds great, but I'm playing golf with the Merrill Lynch guy for 20 years, and then you've got to come back to that. The only other tough one I've had is, I like to diversify among my advisors. So I keep my tax guy over here, and my investment guy over here, and my insurance guy over here. You heard that one? Okay. Then you bring out the wealth management slide. Yes, but you know what? Everything has to be filtered through the tax planning lens as you go into the wealth distribution, protection, and transfer phase. Everything. Nothing can be left out. And if you want it done right, if you and your family want it done right, the quarterback needs to be right here for you and your family and the next generation. You know, it's easier to have one advisor. You've got this angel and devil thing. I want to help all my clients. And Tony answers this well all the time. I want to help all my clients. I got to help everybody. That's my mission in life. But then you've got ideal clients, right? What can you do? Now, if you don't have any clients, it's not a tough problem because you get the ideal clients with a nice mix of the lesser clients. Not a problem. Many firms now have 300, 400, 500 clients, and when we visit them and ask them how many ideal clients do you have, ideal meaning they have a certain amount of assets under management, maybe 500,000. They have real Method 10 needs, which they're implementing through you. They listen to you. They pay their bill on time. They're not a pain in the neck. They're ideal clients. Right? How many do you have? The number 20 is high. Of our best firms, 25 is high. So you may have 300, 400 clients, 15 or 20 or 25 of whom are ideal clients. This is a challenge because now you've built a business with lots of clients to service who may or may not be profitable, but as it is, there's so many of them, you're so busy servicing them, you can't drive deeper into their Method 10 needs and deliver solutions and make your firm more profitable. Remember the goal? Serve more clients, serve them more completely, build a profitable firm. Kind of 3 goals of what First Global tries to help you do with our value proposition. So here's the story I'll tell you, take lessons from it. One of our advisors in Pennsylvania has this dilemma right now. Has too many tax clients to make into wealth management clients. They're not all qualified. He can't handle it all. He has a specific goal. He wants to do $1 million on the tax side, $1 million on the wealth management side. Actually, there's someone else in the room who has that exact same goal. Here's his business plan and goals all in one. It's also his marketing plan. I want to have a practice, a wealth management practice of 100, it might be 75, of 75 ideal premium wealth management clients. Use the adjective you want. Premium wealth management clients. Right now, I have 13. I'd like to invite you to consider being number 14. That's his marketing plan right now. Now, he has 250 clients. What did he do with all these clients? Communicate this to them. Well, he sent them a letter. And he's talking to them one-on-one. But the letter basically said, I've been your accountant for all these years. Chances are I will not be doing your tax return next year. Someone will be doing your tax return. I'll be reviewing it and signing it. But someone else is going to be doing it. I am focusing my expertise, time, and resources on wealth management services. And he defines what by wealth management, comprehensive, people have all these needs, 75 of them. When he sent that letter out, what do you think the reaction was? Emotionally. People happy, angry, hurt, what? They wanted, exactly right. They said, how do I become one of your wealth management clients? What is the ticket to heaven? I want in. And he has standards. Here is what it is. Assets under management, true Method 10 needs. You implement my advice. You do everything here. You pay your bill on time. You don't harass my staff. So what is this firm going to do with the clients who do not opt in? They've arranged for another tier of service. Look, if we're just helping you with taxes and investment planning, here's what we're going to do. We'll take your investor profile, we'll take your assets, we'll put you into IMS Select portfolios, and we'll talk to you X number of times per year. Here's the service thing. If this is not good, you'd rather have someone who can spend more time with you because you don't quite fit, we're happy to recommend another firm to you. They happen to belong to our WIN team, and here's their name and address and phone number. Happy to accommodate you somewhere else. That takes some chutzpah, doesn't it? To actually say, I'm going to get rid of clients? How can I get rid of clients? But it's in the best interest of the clients to get the service. It's in the best interest of his firm to provide the service that he thinks he's put on this earth to provide. what I hope I gave you here is a way of thinking about communicating your value in a broad sense, and also communicating the value you bring in the investment planning stage. With all these features you have at your disposal now, there is no one who can out-advise you. But your clients don't know that. So take every opportunity to deliver the value message to clients in as many ways as possible, and you will see results. Thank you, and I'm done.